Welcome to episode 400 of the Be Smart podcast. Jared, this is a big milestone for us. I think this warrants an air horn, man. I'll take the bell too.
400.
There we go. Yeah, this is huge.
Wow. The podcast has had a number of different incarnations over time. Like for a while, it was just me. Then it's me and you. And I think we've had clips from the radio show. So yeah, 400 episodes.
So before we get into the market headlines, can you walk me through what happened last week as the post-election stock market rally kind of fizzled there on Friday?
Yeah, I mean, look, not to beat my chest or anything, but I kind of thought that would happen. I mean, sentiment just went thermonuclear after Trump was elected. Just people were walking around with a giant boner with Trump getting elected. And basically what the market did was they priced in 4 years of policy action into a couple of days without taking into account the fact that there's going to be problems with execution, without taking into account the fact that Trump has some very explicit anti-free market ideas, that it's not uniformly good. So I think as that realization sets in as time passes, I think stocks are going to go lower. The market currently is a tiny bit lower than where it opened on election day. And I think we have lower to go. So
that leads us perfectly into the market headlines because I want to dig a little deeper on some of that. But first, from Bernie Sanders, I know you saw this tweet. He writes, "I look forward to working with the Trump administration on fulfilling his promise to cap credit card interest rates at 10%. We cannot continue to allow big banks to make record profits by ripping off Americans by charging them 25 to 30% interest rates. That is usury." With that in mind, Jared, a lot of people probably know why capping credit card rates at 10% is a bad idea. But for those who may not, what are the ramifications of going through with this?
If I were to talk about this like I was in an economics class, I would draw a supply-demand diagram where you have a downward sloping demand curve and an upward sloping supply curve, and you have an equilibrium price, which is about 25% interest rates. And then you cap the price, you draw a line across here where basically it's below equilibrium and demand exceeds supply, so you have a shortage of credit. So basically what's going to happen here is there's millions of customers that are only profitable at 20 to 30% interest rates, right? And if you cap interest rates at 10% or 12% or 14%, they are going to be unprofitable customers and they will lose their accounts, right? Like you will see tens of millions of people in the US lose their accounts. I'll keep my account because I'm a profitable customer at 10% interest rates, but a lot of people are not. And if you just kind of step back and think about this logically, like a credit card company has a massive overhead, right? They have to make the plastic cards. They have these call centers. They have the anti-fraud computer algorithms. I mean, it's a very complex business. And even if you're charging 10% interest, that's minimally profitable. Like you have to charge more. So I was looking at a chart of Capital One today. Charts on its highs. I'm looking at this and I'm like, I think we should short Capital One. Like this seems obvious to me. Now, having said that, if you cap interest rates at 10%, the credit card companies will find other ways to make money, right? They'll have hidden fees over here, hidden fees over there. It'll kind of add up. But yeah, the result is a lot of people are going to lose their account.
Next up from Bloomberg, Wall Street bankers spot a fat payday in $1 trillion AI hysteria. At a dinner hosted by some of Morgan Stanley's top bankers in New York last month, one topic dominated the talk table: the fortunes to be made from the frenzy around AI. In the room were many of the marquee names of private capital: Apollo, Ares, Blackstone, HPS Investment Partners, KKR, and Oaktree Capital were all invited. The very same firms that have recently emerged as a serious threat to Wall Street banks' long reign over the lucrative world of corporate finance. While much of the speculative hype around AI has played out in the stock market so far, as seen in chipmaker Nvidia's share price, the giddiness is spreading to the sober suits of debt finance and private equity. Private equity and AI, what does this tell you, Jared?
I didn't hear about this. This is not the way private equity was supposed to be used. If you go back 20 years, private equity buys a tobacco company or a widget maker or a very simple business with stable and predictable cash flows. That was the key. They had to have stable and predictable cash flows because you had to pay these debt payments. And private equity has expanded way beyond that, but AI, like, I'm not sure private equity is really the right vehicle for AI. I think venture capital is, but I don't think like funding AI with debt is a good idea. Like that seems terrible. So this, I mean, I shouldn't be surprised. We got to put this on the shortprivateequity.com website.
100%.
Yeah.
Our last headline is from the Wall Street Journal. Investors are betting on a market melt-up. A roaring market rally since the U.S. presidential election has driven up the price of everything from shares of technology and manufacturing giants to cryptocurrencies. Many investors are betting it has room to run. Are you among those investors that think it has room to run, or do you foresee a pullback as kind of we saw last week on Friday?
I foresee a pullback.
Me too.
A pullback. Yeah.
Absolutely.
You know, we're recording this on Monday. Market's up a little bit today. It's a little bit of a bounce from Friday. Actually, I missed most of the trading day on Friday. I was in Savannah, and on Thursday, I spoke to some MFA writing classes, which was amazing. One of the best things I've ever
Very
done.
cool.
And on Friday, I was with the art people. I was shopping for art for the new house. So, like, Thursday and Friday, I was kind of out of the mix. I didn't really see the market, but I checked my phone like Friday afternoon, and I saw the S&P was down like almost 2%, and I was like, all right, that makes sense.
What kind of stuff did you talk about with the SCAD MFA program, or was it undergrads?
So there was one undergrad class and one grad class, so BFAs and MFAs, and they were, you know, it's SCAD is a good program. But they don't really, it's not like Iowa, right? Or some other program. It's not like there are some faculty that are successful writers, but not a lot. They don't really have really exposure to any mentors or role models, you know? So I come in and I've got 5 books, you know, some of which have been pretty successful. And they ask me a lot of questions, you know, just like, I talked for like an hour and 15 minutes in the BFA class. Like it was terrific.
You're becoming a little bit of a celebrity at SCAD here.
You know what's funny is and I don't know who listens to this podcast. You know, I teach at Coastal Carolina right now, and I teach finance. One of the things I discovered last week was that I like teaching about writing more than I like teaching about finance. And, you know, even when I graduated, like somebody mentioned to me that I could like come back and teach. So maybe I'll do that someday. Maybe I'll quit teaching at Coastal and I'll teach at SCAD instead. You know, who knows? It would have to be an online class. I couldn't do it in person. But I could teach an online class.
Thoughts on Bitcoin? It's about 90.2K right now. Upside, downside?
Regardless of what happens with stocks, I think Bitcoin still has some more upside. I do. First of all, I think 100,000 is just like a magnet. Like it's going to get to 100,000 no matter what. But some of the stuff they're talking about, like having a strategic Bitcoin reserve, and by the way, options are being listed on some of the Bitcoin ETFs tomorrow. So tomorrow will be the first day you'll be able to trade listed options on Bitcoin in the ETFs.
I'm going to have to get on Wall Street Bets for that. That's going to be chaos. Just pure comedy. Okay, main topic Forthcoming changes once Trump takes office, including some cabinet members. Let's start with the Department of Government Efficiency, aka Doge, because of course Elon wanted to name that. This is led by Elon Musk and Vivek Ramaswamy, whose mission is to quote unquote dismantle government bureaucracy, slash excess regulations, cut wasteful expenditures, and restructure federal agencies. Elon and Vivek, what are you feeling about this duo?
I mean, they're two very different people, and Vivek is he's kind of a grandstanding polemicist sort of guy. I don't really see him as a person who gets things done. In contrast to Elon, I think Elon is really going to dominate the discussion there. But there's a lot of things I don't know. Like apparently, this agency or organization doesn't really have any power. Like it has an advisory role to Congress. So I don't know what they can accomplish. There's just a lot of things I don't know. I mean, I agree with it. I mean, we have there are something like 20 or 30 million government employees in the U.S. nationwide, if you include state and local. Like it's a lot. It's a lot. We need to cut the bureaucracy. We have a massive bloated bureaucracy. It started around 2008 is when it started to really ramp up.
Next up, let's talk a little RFK Jr., who has been tapped to be the Secretary of Health and Human Services. I want to talk a little about his impact on big pharma, and then as well as top agencies like the FDA, CDC, and the NIH.
Yeah, again, I don't know a lot about this stuff. I've seen some of his comments on big pharma, like he like they shouldn't be able to advertise. Like apparently, there's only 2 countries in the world where pharmaceutical companies can advertise. If you turn on Wheel of Fortune and Jeopardy, it's all pharmaceutical commercials, like even Fox or MSNBC or CNN, it's all pharmaceuticals. So that's going to be interesting if they can't advertise. That's a big hit for the cable news networks. But I really don't know. I think about a company like McDonald's, right? Like if he's got an axe to get people to eat healthy food, like what kind of changes are going to be coming at McDonald's, and if there are going to be changes, it's undoubtedly going to make the food more expensive. And like, and if a Big Mac goes from $5 to $10 to $15, like that business model doesn't work anymore. And I don't think this stuff is really priced in yet.
Did you see that picture of Trump, Elon, RFK Jr., and there were some others in there on the PJ?
In the private, yeah,
eating McDonald's. The internet kind of lost their minds over seeing RFK Jr. pounding some.
Trump is a garbage gut. Trump just eats garbage all the time, which which I love. Like I actually do like that because I'm a garbage gut. Like I just, I eat fast food. So
do I. It is what it is. Any other cabinet appointee picks you like or dislike so far?
I seem to like Pete Hegseth so far. I think that's a good choice. A lot of people initially were like, oh my God, he's a TV talking head, which is not really out of character for Trump to pick a TV talking head for something. That's kind of what he does. But Hegseth has a great resume. Like he went to, I think he like Harvard and Yale, I think, or at least Harvard. He's a super smart guy. He's a combat veteran. Like, actually, I think he's a pretty good choice to be running. Like a lot of people say he's inexperienced, and I'm like, I don't think so. I think this is the kind of guy you want in charge of the Defense Department. So I think that's actually a good pick. They're talking about Treasury Secretary right now. I think Trump wants to pick Warsh for Treasury Secretary, which I think is a mistake. I think he should have Warsh as Fed chair. But it looks like he's going to pick Warsh as Treasury. I would pick Scott Bessent for Treasury, and then I would pick Warsh for the Fed. But I think Trump is going to pick Warsh for Treasury. So
we have a couple of questions in the mailbag. You ready to dive into these? First up from Mayton. This is regarding the Department of Government Efficiency, which we just talked about, and how renewed effort and deficit cutting will impact your investing approach going forward. So Mayton writes, it's highly likely that there will be massive layoffs in the government sector, a strong dollar, increased unemployment, and slowing GDP growth How will the changing macro environment impact your portfolio moves?
I don't think we're going to have a strong dollar. I think the opposite is going to happen. I think we're going to have a weak dollar.
Yeah, a lot of people seem to think that we are going to have a strong dollar, but I'm kind of on your side with this.
That's very consensus. No, I think the dollar is going to get weaker. I think it's going to happen imminently. So that kind of blows up Mayton's whole thesis. Like I don't take a strong dollar as an assumption at all.
Increased unemployment, massive layoffs. What do you think of that?
If the government cuts 3 to 5 million jobs, that's going to show up in the payroll numbers for sure. Like you're going to see non-farm payrolls of like negative 300, negative 500, like over the course of a year. And they're going to be really scary numbers, you know? But ultimately these people will have to find jobs in the private sector somewhere. And I'm not really concerned about those job losses, but yeah, you'll see the unemployment rate go from 4.1 to 4.5 to 5 to 5.5. Like it'll happen. So
our next question is from Virginia. This is a two-parter. So the first one, more than 1/2 of my wealth is in physical real estate, which is not generating income. Does that change my real estate allocation? Of course, I don't know what her allocation is, but for the sake of this conversation, let's just say 20% using the awesome portfolio as our backdrop.
If real estate is 50% of your wealth and she says it's not earning income, so either it's land or it's her personal residence. I mean, that's obvious. That's high, you know. But real estate, I wouldn't necessarily suggest selling it just to get back to 20% allocation, like in the awesome portfolio. But what I would do is I wouldn't buy any more real estate. Like I would buy stocks, bonds, cash, and gold, and try to increase that part of the portfolio. So
her second question, what are your thoughts on the decoupling of dollar to oil sales, the BRICS, and how this affects inflation and the dollar going forward?
Man, I don't do this kind of stuff. You know what I mean? Like,
That's fair. It's totally fair.
So first of all, like there's macro people love to get all sweaty palms about like the petrodollar and Saudi Arabia using dollars to price oil and all this stuff. And what are the implications for the reserve currency if we stop using dollar? And what are the implications for the reserve currency if the BRICS have their own currency? I literally spend zero time thinking about this. Zero, not at all. I don't think about it at all, ever. It has
there's
no
your
bearing.
answer, Virginia.
And like it's stuff that just never happens. It never happens, like so the dollar as a reserve currency is not going to lose its reserve currency status overnight or in a month or a year or 10 years. It will take like 50 years. I will be dead when it happens.
Let's go to the week ahead. We have some activity in the services and manufacturing sector and a consumer sentiment reading headlining the schedule, but mostly all eyes are on NVIDIA earnings slated for Wednesday. You going any watch parties? You DJing any watch parties for the NVIDIA earnings?
I'll DJ some NVIDIA earnings. It seems like we just had NVIDIA earnings. It seems like not that long ago. Well, I mean, I would be... So the Barron's cover this weekend was an NVIDIA cover.
I saw it.
Yeah, so I would want to be short NVIDIA going into earnings just based on that.
That is all I have for you today. Please, everyone, like, subscribe, and leave a comment below. Jared, thank you so much for your time. We will talk here again next week. Peace out.
Thanks.